Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I am Ryan McQueeney, an associate stock strategist here at Zach's, and today I am joined by what should be a familiar voice to listeners, but is nonetheless not the next voice I usually introduce. That is the voice of Ben Rains, filling in for Maddie, who is on a well-deserved vacation. Ben, welcome back to the show, and thanks for helping out these past couple weeks.
Yeah, glad to be here for the second week in a row. But Ryan, jumping right into Finish Line's usual routine. Today is Friday, July 6th, and we're recapping this week's biggest stories from the investment and financial world. And it was an odd week because 4th of July was right in the smack dab in the middle on Wednesday. But we still have a job to do, so we're going to get right into it because even though it was a short week, it was pretty packed.
Yeah, definitely packed in the few days. Kind of weirdly separated into two mini weeks, and it messed my brain up. But today we're going to be covering a handful of stories from oft-trending tickers, including a few from some favorites like Micron and Tesla. But Ben is actually going to be starting us off with one that includes a familiar brand name, but perhaps not a ticker you'd recognize.
Yeah, that's right, Ryan. We're going to start with MoviePass. It's the subscription-based movie company. I'm not a member. Maybe I should be.
I am.
Yeah, but we'll maybe get it.
Card-carrying member.
Yeah, card-carrying MoviePass member. But we'll get into that in a bit. So shares of Helios in Matheson Analytics, who is the majority owner of MoviePass, sunk around 30% on Monday on news that they filed a shelf offering to stay above water. And Helios and Matheson, for those of you that don't know, trades under the ticker HMNY. The company hopes to raise $1.2 billion in equity and debt to fund MoviePass, which now boasts about 3 million subscribers, but faces a slew of challenges going forward. And as we said before, for those of you that don't know, MoviePass runs a relatively simple business on paper. It's a subscription-based service that charges about $10 or less a month outside of some limited time offers to allow users to go to one movie a day for the month. So for $10 a month, you could go to 30 movies. I'm not a user, even though I go to enough movies where I probably should be, but I know Ryan is or was or...
Currently am, yes. And so just to dig a little bit more into that pricing, $10 a month, basically everywhere that I know of, off the top of my head, one single ticket is more than $10 a month. So MoviePass technically then is going to be operating at a loss if you go to one movie and you get to go to a month is like 30 days. So you could go up to 30 movies in the month. And so, yeah, you can see where these challenges are coming from, but I'll let you get to the specifics here a little bit more.
Yeah, so for sure. So MoviePass, as you can tell by their business model, which is a little strange, since one movie in a city normally costs about $15, they lost nearly $17 million in the first quarter, and then they lost about $40 million in May, and the expectations are they're going to keep the losses coming, even though they continue to grow their subscriber base.
Well, because they continue to grow subscriber base. So it's not just, I mean, you know, as they're adding members, they're losing more money because when these people use this service, they lose money. So it's kind of a strange business model right now.
Yeah.
And I will mention too that they get some revenue from other sources. Part of this big change, like last year when they shifted to the sub $10 a month business model, it used to cost $40 a month, and then it was 10, and it kind of exploded after that. Part of that was they're going to start kind of mining your data a little bit. There's ads in the app itself. There's like banner ads. They partner with certain movies where you'll get an email and they'll be like, go see this, which is clearly, some sort of paid partnership. And then from what I understand, your data that they know about you, your name, email, location, that type of stuff is probably up for sale in a certain capacity. Again, Helios and Matheson is a data analytics company, so it's that type of world that you're living in. So it's not just the $10 a month that they're getting in revenue, but that's still the chunk of it. So they are losing money every time you go to the movies. And yeah, I mean, I guess the idea is like eventually you jack up the price, or eventually you get bought by something and they make it profitable, or it's more of a like, we'll figure it out later once we get to 15 million subscribers or 20 million subscribers or whatever. Whether they're gonna make it there, though, I guess is the question.
Yeah, I mean, to cut your price point from $40 a month to $10 a month is kind of insane, and especially I feel like the people who are actually using MoviePass do go to a lot of movies.
Yeah.
So.
Oh, yeah, definitely. Because it makes it super affordable and fun,
Yeah.
and like you can go see all these weird, obscure things you would have never seen. And I know in the case of Chicago, some of the participating theaters are like really indie, art house movie theaters, and that's a place I would never even consider going. But with a MoviePass, it's like, gee, I'm bored. What's on at this weird indie place over here? So yeah, it's definitely interesting.
Yeah, and so for movie lovers, they hope it stays in business, and they hope what the parent company is trying to do ends up working. So yeah, the company is exhausting all their options to continue raising cash. They recently enacted surge pricing, which Ryan might have experienced this. They're charging at least like $2 more for really popular movies. So I guess that's a little bit of bump for these huge blockbusters in the summer, at least. In that while this shelf offering is not guaranteed to succeed, it could provide like a much needed jolt to HMY or NY, that ticker there again, and MoviePass. But on that note, let's move on to another more well-known company for most people out there.
Definitely, and one also going through some changes. So we're talking about Dell here, the kind of notable PC and otherwise consumer electronics brand. Dell announced on Monday that it would offer a new class of publicly listed common stock following the completion of a proposed exchange of Dell Technologies Class V tracking stock, which trades under the ticker DVMT. Sorry, I knew I had it in my notes somewhere. So yeah, just trying to kind of explain what's going on here, because some people might have known about the DVMT ticker and been like, wait, I thought Dell did trade currently. So Dell went private several years back, kind of amid weird fluctuations in the PC market. We've been talking about this slumping demand for PCs now for quite some time. And so they went private. While private in 2016, Dell acquired EMC Corporation. And then when it made this acquisition, it also acquired EMC's 82% controlling stake in VMware, which is a cloud computing firm. Dell paid EMC shareholders partially in cash, and then also with a tracking stock that represented its controlling stake in the firm. And this is the Class V tracking stock, which now currently trades under the ticker DVMT. And then the other 18% ownership of VMware trades under the ticker VMW. So DVMT for now a couple years has been a way of owning a share of Dell's share of VMware. And now with this new deal, the whole of Dell is going to become a publicly traded company once again by swapping DVMT with cash and then this newly issued stock in Dell itself. So according to the statement, Class V stockholders will have the option to elect $109 in cash considerations per Class V share, which represents a 29% upside to the Class V share price immediately prior to the announcement. So again, this DVMT is now going to change into the official Dell stock. It's going to trade on the New York Stock Exchange, and one of the world's most iconic PC brands will be officially back on the public stock market very soon here. An interesting story from a company that has certainly had its ups and downs over the last 10, 15 years. Gonna keep this train moving though, and move on to what has been an interesting week for none other than Tesla.
Yeah, it seems like it's always an interesting week for
That's a
Tesla.
great point. Yeah, that's a good point.
But this week was particularly interesting because what should have been a huge
Celebratory.
Yeah,
week.
it should have been a big week. Investors, if you just looked on the face of things, it should have been awesome.
If you only read the headlines, which I advise against.
So shares of Tesla dropped 10% this week, despite the fact that the electric car company finally reached its 5,000 Model 3 vehicle week production target in the last week of the June quarter. So that they've been trying to get there for a long time. They finally reached it for their mass market, more affordable Model 3. But things didn't really go that well for the company if you look a little deeper. So Tesla fell significantly short of its Q2 delivery estimates, delivering about 41,000 vehicles, which fell way short of the street consensus of about 51,000 vehicles. So 10,000 short there. Really not a great thing. And then there was also reports from Reuters, which suggested that Tesla pulled workers from other departments, including Model S production, just to meet these Model 3 goals. So that's not really a sustainable business model going forward. It was just like Elon Musk and the whole company has been talking about this for so long. We have to just do everything we can. They built some outdoor kind of open air production line couple months ago to just make this push. So
this logic follows too. If you're delivering 41,000 vehicles against 51,000 consensus, but still getting to that 5,000 per week production for the Model 3, the logic that you did pull people off of other projects, specifically other models production lines, that logic follows. Certainly, that definitely makes sense as to why you lagged on one end just to get to a different goal.
Yeah, and I think it also speaks to just why some investors are so frustrated with Musk at all times, because there wasn't really a need to keep pushing out this 5,000 number again and again and again and again if it wasn't that attainable. Like, there was no need to do it. I mean, he just keeps over-promising and under-delivering on everything, and it should just be relaxed.
That's the great point too, is that, these we talk about meeting deadlines in life, and most of the time we talk about meeting deadlines in the context of other people giving you a deadline. When we talk about Tesla missing its deadlines, we're talking about self-declared deadlines most of the time. It's not like everyone was like, okay, I'm selling my Tesla shares if you don't get to 5,000 by the end of June. But, we saw a sell-off this week because this self-proclaimed deadline, which had already been pushed back, had such a difficult time being reached. So it's weird, and we've aired out our grievances with Elon Musk's thought process on this show before, and I guess this is just yet another example of it. So.
Yeah, for sure. But there was some quick backlash and kind of discussed for some analysts, including Goldman Sachs, which reiterated its sell rating and put a $195 price target for Tesla stock. For reference, it closed at $309 per share on Thursday. So when they gave that price target, it represented a 42% decline from Monday's closing price, which is pretty massive and really bearish. In that, I think that speaks pretty much all you need to know.
Definitely. So we're gonna move on here. I mean, it's an interesting story. Definitely says a lot. When you look at what one specific analyst firm is saying, it's obviously sometimes feels like you're plucking an opinion out to support a case, whereas I'm sure there's several analyst houses that are still bullish on Tesla. It felt like Goldman Sachs' note on Tuesday morning spoke to what a lot of people were feeling after the announcements on Monday.
Yeah. I think, obviously this does not speak to what everyone on Wall Street thinks about Tesla, but for reference, it's a good frame of reference at a time when a lot of people were upbeat initially with that 5,000 Model 3 goal being met finally, but who knows really where it goes from here.
Definitely. Well said there. I'm going to move on here, wrap things up with news from Micron, obviously one of the trendiest stocks on Wall Street. News that a Chinese court had ordered Micron to stop selling some memory chips and solid-state drives in China following a patent infringement complaint sent shares of the popular tech stock down more than 5.5% on Tuesday. That complaint came from Micron rivals United Microelectronics Corporation and Fujian Jinhu Integrated Circuit Company. I actually think I did a decent job of saying that. Apologies, as always, if I butchered the name. But this really highlights the rise of domestic competition for chip makers in China as the nation continues to build up its own semiconductor industry. The ruling also spooked investors who have grown weary of relations between American and Chinese companies in the midst of an ongoing quote-unquote trade war involving the governments of both of those countries and obviously two of the largest and most powerful economies in the world. I think, it's kind of a circular, you can get into a bit of circular logic as to which one of these things we're concerned about. Are we concerned about the fact that there's more competition in the semiconductor space between American manufacturers and Chinese manufacturers? Are we concerned about the trade war? Is it really just a story that one thing is kind of causing the other? Micron responded to the ruling on Thursday, saying that it will comply with the decision, but firmly declaring its innocence from any patent-related wrongdoing. Going to continue to. This is just an injunction for right now. They're continuing here on the legal process. Micron also attempted to downplay the effect that the ban would have on its financial results, saying that the affected products would represent just slightly more than 1% of its annual sales, while the temporary ban, will only hurt Q4 revenue by about 1%. Micron continues to expect Q4 revenue in the range of $8 billion to $8.4 billion, which is its previously announced guidance range. So kind of downplaying the effects there after what was a very volatile day on Tuesday, down 5.5%. Investors came back from the holiday on Thursday and breathed a bit of a sigh of relief and learned that perhaps not the end of the world for Micron, even if this does end up being a permanent ban. Interesting news. Micron is currently a Zacks ranked number one strong buy. Tough for our rating model to see headlines like this coming. But as we respond to these things and we learn more about them, I don't even know if 1% on Q4 revenue is going to be something that would usher in downward earnings estimate revisions that would have an effect on that Zacks rank, simply because that is such a tiny dent into the top line that it's likely to have an immaterial effect on the bottom line, especially when Micron is reiterating its already announced guidance range, which is what so much of these estimates are built on.
Yeah, and that's obviously really good news for investors that they're not super concerned about it at the moment. And they're, like you said, they're just saying we're still in line to reach our guidance for the quarter, which is, great news.
Definitely. I think that does it for us today, though. Four pretty interesting stories from some very popular brands. And it's nice to get back in the groove of things here with the holiday week, kind of disrupting our flow. Nice to be speaking to you guys again, as well as I was out last week. But as a reminder, shoot us an email at podcast@zacks.com. If you have any questions, comments, or concerns, if you thought we missed something, or if you want us to cover a different story, remember that you can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. Thank you again for joining us, and we will see you next time on the Zacks Friday Finish Line.